Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, after a two-day meeting, the Federal Reserve in the US unanimously decided to hold rates steady at a range between 2.25% to 2.5%. The decision follows months of unprecedented public criticism of the Fed from Trump, who has called its decision crazy and discussed firing the Federal Chairman, Jerome Powell. Although growth is strong at 3.2% in the quarter in the US, the Fed is holding rates because they feel that the wonderful low inflation we could be seen as a major record, Trump said. Commenting on whether comments such as these affect the Fed's decision, Chairman Powell said, "We are a non-political institution, and that means we don't think about short-term political considerations. We don't discuss them, and we don't consider them in our way of making our decision, either one way or another. We think our policy stance is appropriate at the moment, and we don't see a strong case for moving it in either direction," Trump said at his press conference following the rate decision. From a technical point, the market again rejects the level of 70.65, which is still seen as minor, and from the decline now sets up the day for a challenge to the downside, which immediately comes in at 70.05, with the yearly objective remaining at 69.40. And the weak candle now is actually in place from this hammer. I'm wondering now whether it can hold. From a technical point, it still remains bearish, so I'm still holding that view until we get some kind of turnaround, which is unlikely. Well, the dollar index, which measures the greenback strength against a basket of 6 major currencies, broke out of its losing streak and rebounded away from a one-week low of 96.84 to a high of 97.43. Despite President Trump's tweeting on Tuesday that the Fed should reduce rates, early this morning, as I mentioned, the US Fed did keep its interest rate on hold. From a technical point, you can see the market did clearly reject that resistant level of 112.55.65 after briefly posting a high of 112.64, which was right on target. From the rejection, does set up the day for a bearish case, but still keep your stop losses accordingly to your risk management. At this stage, I see the support coming in at 111.75 and with the objective now around 110.20 to 70. Well, the dollar yen posted a long-legged doji after stabbing to the downside quite close to its objective of 110.70.80. From the lows of 111.04, the market has recovered slightly, but not enough to support, I believe, in the longer term of a further weaker play and keep its target to 110.70.80 and the resistance around 111.85 on the day. The sterling still at this stage is neutral due to the fact that the descending triangle was negated. But later today we do have the Bank of England's rate decision, and it is widely expected they will keep rates on hold. I do see a range though, 129.65 to 80 and a top around 131.15. Well, gold is still on the weaker case after again retreating away from the 1,288. The longer it stays in the bearish trenches, the risk is to the downside. But I do see this as a buy opportunity, but not until around 1,255 or 65 in that $10 bracket. And you can see here from there, I do expect to see the market rise. One thing to note is if I draw this in, you can see that the market is in a descending pattern here, seen as a falling wedge. And therefore we could see a rebound from here and look up towards the region, I believe, of 1,288, but needs to break above there to get the next target to around 1,300. And looking at oil, well, the market hasn't posted any fresh highs or lows and still poses the downward threat. But I do believe the market's still looking towards 61 or $60 a barrel. Any advances should still find a cap around 64, 65 to 85. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the great start to the new day.